Hello traders, the title of the video is Elliott Wave Practitioner explains the third Elliott Wave extension. Let's get started. I'm on a monthly chart of Comcast Incorporated, Epic CMCSA, Charlie Michael Charlie Sierra Alpha. This is Comcast Corporation, a stock, a Class A, and we want to talk about Elliott Practitioner, Elliott Wave Practitioner explains the third Elliott Wave extension. Alright, so you may say to me, George, I already know about the third Elliott Wave extension. I do not have to watch this video. And I will say to you, please watch the full length of this tutorial so you may understand everything. I'm going to go step by step. As we are going step by step, I will be going and also deeper and deeper, analyzing, in this case, Comcast, okay, a stock, all right? So we are doing a technical analysis for Comcast. At the same time, we are talking about, okay, the third Elliott Wave extensions, all right? So if we start counting wave here, all right, which a lot of traders will do, they will call this one here. Going to zoom into it, so they will say, all right, Joe, there was a consolidation here, and this is the first Elliott wave with a question mark on it because it did not break resistance on the left hand side. And trader will say, here we go. He's talking again about the Elliott wave count. All right, but we're going to go a little bit deeper today. All right, so this is the second wave. If you were here, you say first wave, second wave, and you will say probably this is the third wave all the way up there. I'm going to color it now into orange. All right, that's the third Elliott wave. If you agree, we're going to go a little bit deeper now. Soon you'll see why I'm doing this. All right. And followed by the fourth Elliott wave, 1, 2, 3, right there. The fourth Elliott wave, color that into pink. And the fifth Elliott wave. Fifth Elliott wave has been subdivided into 5 minor waves. Alright, and then you'll be saying, Joel, where is the third Elliott wave extension? And I will say to you, hold on a second, we'll get there soon. Alright, and you will say this is the fifth wave that has been extended, alright? Something like that. Or you may say, George, following our guidelines, this is not the beginning of the first wave. Probably is right here because we have an inverted head and shoulder chart pattern. Doesn't matter because in both cases, okay, we can still make excellent trading decision whether you choose it from here or here. But in this case, in my view, one should start here, and I will show you soon when we go to the yearly chart. You will see why we should start counting the first wave from here, all right, instead of here. So understand that some trader may start counting from here: first wave, second wave, third wave, fourth wave, and the fifth wave. Some may also think that the fifth wave has ended here. But personally, I think it has ended here. Alright, so we go into the mind of other trader. We see now this was happening here. If we start counting wave from this point or here, okay, that's 2009, the reference point right there. Okay. Now what I'm going to do, we're going to apply the Fibonacci extension to the first wave. So this will allow us to determine, all right, the third Elliott wave extension. We know that the normal third Elliott wave very often will stop at 138.2 at 161.8% Fibonacci extension level of the first wave. I thought I would say we already know that, George. Okay, we are applying a Fibonacci extension to the first wave. So the first level that we are watching, 161.8% level. Stay with me, please, because I want to highlight something very important. All right, color that into light green. And the next levels that professional watching, they're watching the 200%. Okay, let's go to the 261.8% is somewhere up here. I will bring it up soon. So 161.8% level, the 261.8% level, those are the level if the third wave is extended. Okay, where the third wave, the extended third wave, is likely to stop 261.8%. Right there. So you can see that the 261.8% level, I'm going to color it now into orange. Right there. Okay. So as the price breaks above the high of the first wave, today we'll be monitoring the reaction of the price at 161.8% level. If it stops here, that's a normal third area where you can see that if you watch the candlestick bar here on the monthly chart, you see that hammer there plus that doji, the Elliott wave practitioner were acknowledging the 161.8% Fibonacci extension level of the first wave. But as the third wave is extended, which means if final support breaks above, retest the 161.8% Fibonacci extension level of the first wave, and if we receive a buy signal here, we know that our third Elliott wave will be extended because it's no more a normal third Elliott wave. It has exceeded the 161.8% Fibonacci extension level of the first wave. So the question is, where is it going? All right. So professional will set the target at the 261.8% level. If it breaks above the 161% Fibonacci extension level, the next level that professional watching during the third Elliott wave extension is the 261.8% Fibonacci extension level. As you can see, that's the orange line there. And there were a kind of profit taking there because Elliott wave practitioner were expecting the fourth Elliott wave here. But the price breaks above the 261.8% level, which is another breakout zone, like the 161.8%, the 261.8%, the 361.8%. Those are the breakout zone. Price breaks above, retest, and continue to go up. And the third Elliott wave has ended at a 314% Fibonacci extension level. Okay, going to call out which lines. I'll use dark green. So that's where our third Elliott wave has ended. So when the third Elliott wave is extended, the Fibonacci extension levels that we must watch is the 261.8% and the 314% Fibonacci extension level. Especially if the first wave is a little bit long. You see this one is long. It's a bit long, average long, not too long, not extended. If the first wave is averagely long, okay, we will expect, okay, we will be monitoring the level of 261.8% and the 314% level. Most of the time, very often, if we have a long first wave which is not extended, the extended third Elliott wave will end at the 314% Fibonacci extension level of the first wave. This is a scenario that very often will take place. This is what has happened here. 1, 2, 3, and now we have the fourth Elliott wave. All right. So you may say to me, how about traders that counted their wave like this? So trader who count it like this, you see, starting their wave count here. All right. Okay, here it is. They will say, all right, now it has exceeded the 3. You see again that the 314% level. That's where some trader may say the third Elliott wave has ended. You can see after that, trader who labeled this one first wave were trying to sell. Probably find it a bit difficult to break this zone. You see all the blah 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 in this zone because of that reaction. The Elliott wave practitioner were thinking that the fourth wave is due at this point in time, but the price continued to go up because in this case, in my view, if we go to the yearly chart, you see soon, this is the beginning of this first Elliott wave. So 261.8% level, watch that level during the third Elliott wave extension. And most importantly, do not ignore the 314% Fibonacci extension level. But if the first wave is not very long, suppose like this one here, sometime for some stock that are very bullish, I'm choosing my word carefully here. If the stock is a dynamic bullish financial instrument, the price will go above the 314%, go to the even and exceeded that level, reach the level of a 414% level or 514% level. In the case of dynamic bullish stock with a short first area wave. All right. Just remember 261.8% and a 314% level. Those are the Fibonacci key level that we watch if we have an extended third area wave. I have not finished yet because I want you to see more so you understand everything. So we apply it to this first area wave. Okay? All right. But there's one more thing. This is about the higher degree wave count. On a higher degree wave count, all right, our first area wave of a higher degree, this one here. From here all the way up here, that's the higher degree wave, first wave. And our second wave of a higher degree is the one ending here. That's why I was telling you that in this case, though following our guidelines, some traders may think that the first wave is starting here. In fact, it's starting here. That will make more sense because the second wave of a higher degree is ending here. So the blah, 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 all the way here, that's the second wave of a higher degree. Like I was showing you before, I was telling you that I will talk about in a minute. If you go to the yearly chart, you can see that this is the first wave of a higher degree, 1, 2, 3. That's the second wave of a higher degree. We are now in the third wave of a higher degree. So what I was doing at the beginning of this tutorial, counting 1, 2, 3, 4, 5 wave all the way up here, that's the third area wave of a higher degree that we were counting on the monthly chart. All right. But now, what we want to do now is to apply again. So I talk about the third area wave in this move from here to here on the monthly chart is the third area wave of a higher degree, which has been subdivided into 5 minor waves. And then we were applying the Fibonacci extension to the first minor wave of this third area wave of a higher degree, and we can see that the third minor wave of that third wave of a higher degree has stopped exactly at the 314% Fibonacci extension level. Now, what we want to do, because we want to check whether we have a normal higher degree third area wave or an extended higher degree third area wave. For that, we'll again apply Fibonacci extension to the first wave of the higher degree, which is this one here. Are you getting it now? We can put it here or here. Normally, I say to trader on a yearly chart, it's better to ignore the shadow on top. Let's put it at the top first, and then we'll put it at the closing price. Fibonacci extension, all right? You remember? So we put it at the top, where is the 314% Fibonacci extension level. That's the line here. That's the line here. So for traders that are applying the Fibonacci extension to the first wave of a higher degree like this at the top, their 314% Fibonacci extension level is the red line here. And they will be monitoring that level. The third area wave may not reach that level. If you look carefully now, the third area wave is now at a 238.2% Fibonacci extension level of the first wave of a higher degree. But because we place our Fibonacci extension at the top of this candlestick bar, but normally what I recommend to traders on a yearly chart is to ignore the shadow on top and to put it at the closing price. Now that I put it at the closing price, where is that 314% Fibonacci extension level? That's the line here. The orange line at the $49.35. Will that third area wave push it there, or will the fifth wave end there? Sometime the fifth wave will end at a 314% Fibonacci extension level or the first wave. So those levels, we leave them on our chart. The third wave of a higher degree may not reach it, or may not reach this one here, but the fifth wave may reach one of those 314% Fibonacci extension level. So now that we apply the Fibonacci extension to the first wave of a higher degree, we must monitor that price reaction. We must highlight that level, which is the $49.45. So in this case, you can see that for the higher degree wave count, we have an extended third wave. Why? Because, all right, it went above which level? The 161.8% Fibonacci extension level of the first wave. You see here. You see again on the yearly chart, the reaction here. I want to draw another line there at the 161.8% Fibonacci extension level of a higher degree. Okay, here it is. Let's color it now into red. That's the level here. You can see that our third area wave of a higher degree has been extended because it breaks above. Can you see that? It breaks above and retake that 161.8% Fibonacci extension level. So did you remember that I said before at Day Pro Trader that the 161.8% level, the 261.8% level, the 361.8% level, okay, are the breakout of Fibonacci key level. All right, so here, breakable, it is boom, up. All right, so here it is again. All right, as we apply it to, okay, the first wave of a higher degree, putting it at the closing price instead of, okay, the top here. So in all cases, now that I place it like this, I place my Fibonacci extension like this, to the first wave of a higher degree, our extended third area wave of a higher degree, where it is stopping exactly where? At the 261.8% Fibonacci extension level. As I mentioned to you earlier, if the third area wave extension is extended, which level should we watch? The 261.8% level. That's where we are now. Right? So if I move that peak line to that level, you will see that, okay, for a higher degree, we are now at a 261.8% Fibonacci extension level of the first wave of a higher degree. For that higher degree wave count, there is a high chance that we may see at this junction. So this candlestick bar is a yearly candlestick bar. It must close first. So it will be closed on the 31st of December 2017. And in January to February 2018, probably we may see the fourth area wave followed by the fifth wave of a higher degree. I don't want the video to be too long, so I will stop here. So if the third area wave is extended, we apply, okay, it's extended. We apply Fibonacci extension to the first wave. We highlight the 161.8% level, the 261.8% level, and the 314% Fibonacci extension level. Because it is extended, it will be above the 161.8% Fibonacci extension level. The next target level is 261.8% level or the 314% Fibonacci extension level. I need to remind traders that not all traders draw their Fibonacci extension level the same way as I show you here. On the yearly chart, I usually discount the shadow. Some traders will place it there. So we want to draw both for Fibonacci extension level and monitor the reaction of the price in that zone. Most of the time, stocks that are very, very bullish can push it all the way to the 314% during the third area wave, up to the 314% Fibonacci extension level or the first wave, provided that we have a long first wave, but that first wave is not extended, but it's a bit long, it's not short, all right, can push it up to the 314% Fibonacci extension level of that, first wave, okay? But sometimes, if the third area wave couldn't reach the 314% level, but it has been extended, most of the time the fifth area wave may end at that 314% Fibonacci extension level. So now, as things stand, as I draw it like this, if we, at the end of December 2017, and next year we see the fourth area wave, orderly fourth area wave, without too much mess, because the price can come back down all the way here. You may say, John, where is your fourth area wave? I will say to you, one step at a time, all right? So, all right, one step at a time. So if we have an orderly fourth area wave of a higher degree, we will be monitoring. If the fifth wave is underway, we will be watching a level of $49.35 because it's corresponding to the 314% Fibonacci extension level of our normal long first wave that is not extended, or we will be watching the level of $56 level, which is the 314% Fibonacci extension level for Fibonacci trader that put it at the top of the first wave like this, those who did not ignore the shadow on top there. All right, so this is about area wave. A practitioner explains the third area wave extension. If you have any question or suggestion, put it in the comment section. And in due course, I will be recording another video to answer your specific question. To summarize this video, when the third area will be extended, it will be above the 161.8% Fibonacci extension level or the first wave. One must watch the level of 261.8% and the 314% Fibonacci extension level. Doesn't mean that the third area will definitely end there. Sometimes it will end exactly there. For this talk, talking about technical analysis for the Comcast Corporation, the price is now at the 261.8% Fibonacci extension level during the third wave that has been extended, okay, of the first, wave of a higher degree. There is a possibility that at the end of December 2017, we may see the fourth wave followed by the fifth wave. If the third wave did not reach the 314% level, sometime, not always, not guaranteed, the fifth wave may end at 314% Fibonacci extension level. If you find this video truly useful, please let us know by giving us the thumbs up. If you think that this is another blah blah blah, alright, let us know by giving us the thumb down. This will put us under pressure to improve our next recording. If you think that this is an essential tutorial, feel free to share it with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about area wave practitioner, explain the third area wave extension. Happy trading to you all and speak to you soon.